Hello, I think that we're live now. So firstly, welcome everybody. For those of you who don't know me, I'm Rebecca Hope and I'm the President of the Banking and Financial Services Law Association. And I'm delighted that we have Rod Sims here today for on the virtual couch discussion. Before I introduce Rod, I really just wanted to have some housekeeping matters. You can ask questions throughout the session if you're participating by Zoom by typing them into the Q&A box at the bottom, and I will try my very best to keep up to speed with all of the questions as they come through. Please don't try to use the chat box because it's been disabled for this, so all questions will go through the Q&A. I'd also say please be patient if there are any technical challenges. If either of us freeze throughout the discussion, we'll get it back up and running as soon as we can. As I said, I'm delighted to have Rod Sims join us today. Many of you, well, all of you will know that Rod is the chair of the ACCC. He was appointed in 2011 and is in fact the longest serving chairman of the ACCC, appointed for 3 consecutive terms, which I think, Rod, must be the regulator equivalent of the Hawks three-peat, surely.
Well observed, Rebecca. Yes, indeed. With the 3 footballs behind me, even though they're off to that side of the screen. Yes, indeed.
We can still see a bit of the scarf, so that's enough to give it away, I think.
There they are, the 3 footballs, but yes. Excellent.
Rod, thank you for joining us today. There's obviously a lot of things going on with the ACCC and competition at the moment, and particularly for financial services. And I really just wanted to perhaps start off by casting your mind back to February this year. And I think that, as Hartley said, the past is a foreign country. It really seems such a long time ago. But in February this year, the ACCC announced its priorities for 2020. And then, like companies and organisations all around the world, within a matter of weeks, quickly had to repivot and focus on the challenges that COVID-19 has really brought for us. And then you've received an enormous amount of applications for interim authorisations in that period. And so I was admiring your cat there, that's excellent.
Yeah, timing is not good.
Cat's timings are normally impeccable, I find.
Okay.
But you've received an enormous number of interim authorisations, ranging from, one of my favourites being authorisation for 7-Eleven franchisees to coordinate their opening hours, which I particularly like because I had always assumed it was 7 to 11 anyway. But then, sort of more significantly, allowing banks to cooperate to provide relief packages to small business, allowing members of the Australian Securitisation Forum to cooperate to ensure liquidity of smaller lenders. I was really interested in how the ACCC has approached the interim authorisations and the deluge that you've had. Is it a matter of, trying to apply some sort of net benefits test up front, or is it in these circumstances a bit of desperate times call for desperate measures?
I think it's more the latter. We got a number of queries quickly. Probably Anna Bligh from the Australian Bankers Association was one of, if not the first, to give me a call. But we then had a few of them, and we had a meeting amongst commissioners and decided that really what people were asking to do is something they really had to do. So we thought about it it's a really interesting topic, and it's been much discussed internationally, and we've had some criticism internationally for authorising so much, and questions about why does Australia need to authorise anti-competitive activity when other countries can get away with not doing that. And I think those other countries are the worse for not doing it. Of course, they don't have the authorisation provisions that Australia has, and New Zealand has as well, which I think is a huge advantage. So there were 2 issues in our mind. One is this is a bit like wartime, when obviously you need companies to cooperate, and because they're doing things in the national interest, they're not going to take advantage of the situation. Not that we relied on that, but there's a coming together for the right reasons, and all the companies I've dealt with overwhelmingly have given me the impression that's what they're doing. Secondly, the authorisation allows us to give immediate interim authorisation, so they can do it straight away, and it allows us to impose conditions. So make sure there's no price fixing, make sure they let us know exactly what they're doing. On a number of occasions, embed somebody from the ACCC into the discussions. So really we could keep an eye on it. And that contrasts with other countries where either they've said, look, we'll give a general forbearance, but firstly, what does that mean? And secondly, third parties could still sue them, whereas in Australia they can't. So you still, whatever you do, you're subject to third party action. But also, some countries have tried to say that, we've got to make sure competition law is there and we've got to take a strong approach. And I think that inflexibility damages the perception of competition law. I mean, the fact that we were able to do this has raised our status within government and in the corporate sector. So the corporate sector, by saying, look, we're really not going to do this unless you say it's okay, that's actually good. I mean, that means they're taking competition law very seriously. And a lot of what happened, just to finish on this, is that, there were two broad reasons for doing them. One is to maintain or increase supply. And the other one was where they wanted to give hardship relief. And of course, that's the dominant issue in banking. I think it's a complete issue in banking. And how did that come about? Well, in part, discussions with politicians. Then banks would say, well, look, this is a bit of a burden on us. We will if others do. So, of course, naturally, they come to us to get that coordinated. So I think it's been good. I also think, just one last comment, there's been things that are done which wouldn't have been done as quickly. Yeah. And the supermarkets all agreeing on the social distancing, all agreeing on the measures they'd take to perhaps erect glass screens and a whole range of other things that companies have done, which, yes, they'd have eventually got around to, but I think they did them faster because they knew their competitors were going to do them and they were sharing what they were going to do, which gave other companies better ideas about what they should be doing in the COVID environment. So sorry for a very long answer, but it's, we've done about 30 of these in a small, many of them we were clearing within 3 or 4 days of them first coming to our notice. But, as your audience knows, we can cancel them anytime we like. So we're in a very strong position. We can impose conditions. So I think it's a pretty safe, effective process. And frankly, at the ACCC, we're pretty pleased with how it's all gone.
Yeah, I was interested. Do you think that the interim authorisations have really produced good consumer outcomes? They've been effective in achieving that, I guess, particularly from our perspective, from a banking lens over that.
Oh, I think they have. The fact that you've got small business households being able to defer principal and interest on their loans, it's been a bit of a godsend for some. The fact that you've been able to get together to issue debit cards to people who rely on cash, the fact that you've allowed different forms of banking for people in remote rural areas. All that takes a bit of coordination as well. So it's not just, would they have done it themselves? I don't know, but I think the ABA has played a pretty big role in this. And so the ABA can only go so far unless there's authorisation being allowed. So I think there's a lot happened that wouldn't have happened or wouldn't have happened as quickly. So no, I think it's been very successful.
I guess one of the challenges for the interim authorisation, particularly for banks, I think, is that the conduct that's been authorised sort of was really a needs-based requirement for giving relief packages and things like that. But the COVID-19 situation across Australia is so varied at the moment. And I was just interested in whether the ACCC has given any thought to how it might roll back that interim authorisation. I mean, I'm in Melbourne. I never imagined that I'd be subject to a curfew, whereas I've got family in Queensland who are happily going about their own business. So just really interested as to how that might work, and whether that will be in discussion with the banks and the ABA, or whether there's been any thought given to it at this stage.
Yeah, look, two things. One is a lot of thought's been given to it. The fact that we're as close as we are to what's going on means we'll be well placed to indicate that it should phase down. And we've done that with a couple of authorisations, not the banking ones. So we're very close to it, very aware of that. We realise these have to be seen as emergency measures, so they have to come off fairly quickly. Look, the Victorian situation is interesting because, and again, I mean, I've got them all in my mind, so it's hard for me just to focus on banking, but there's certainly some of them where, we just, again, I can't remember if it was an interim or it wasn't an interim, whether it was a draft or a final, but in relation to hospitals and sharing of work between hospitals. Now, clearly, that is of relevance in Victoria, no doubt about that. You can see the relevance, but not relevant in Queensland, to take your example. But what Victoria has shown us is we don't know what's going to happen tomorrow. So we judged there was very little harm in this, therefore keep those ones going in case they're needed. So there's a little bit of that going on, but we certainly, I think our judgment is it's a bit premature to start saying, well, all the states bar Victoria and New South Wales have got it licked, therefore get rid of it for them. And you just don't know. So I think our takeaway from Victoria is look what can happen so easily. So we're not trying, we thought we may start easing some of these up, but we're just watching and seeing at the moment.
A prudent approach, I think, in the circumstances. Rod, I wanted to take you on to discussing what the current focus for the Financial Services Unit at the ACCC is. But probably it is worth setting the scene for some of our members. We've got people from New Zealand who are participating who won't have such a clear idea. But I guess looking at what it is that the ACCC regulates as opposed to what ASIC regulates. So the ACCC really looks at restrictive trade practices and the things that traditionally go to looking at having efficient competition in markets, whereas the ASIC regulates consumer protection issues, such as unfair contract terms, unconscionable conduct, misleading, deceptive conduct, as it relates to financial services, whereas the ACCC retains regulatory responsibility for that for other aspects of trade and commerce in Australia. So I guess setting that scene, so it won't be surprising for people, perhaps why the ACCC isn't focusing on some areas. It'd be really interesting to hear from you what focus the FSU has at the moment, and even whether it has changed significantly following COVID-19 or not.
Yeah, good question. Very good question, because we're conscious that some of the inquiries the government's asked us to do get into a little bit of ASIC territory. We talk a lot with ASIC, and I've never sensed they're fussed about that. But in 2017, the then Treasurer, who's now the Prime Minister, announced this series of inquiries. He did so under the heading of a permanent unit inside the ACCC to look at competition issues. He was quite clear it was all about competition. Then almost the week after, he wanted to put a levy on the banks. And so he said, well, you were going to start a year later, but I'll get you to start right now, 1 July 18, so that you can, sorry, stepping back. So what was in the mind at the time when we were given this mandate was the Productivity Commission had just done a whole look at the financial sector. I think, can't remember how wide it was now, but it doesn't matter. And a whole lot of competition issues had come out of that. And the idea was there should be, very targeted, focused ACCC-like follow-up. So that the idea was Productivity Commission would finish its work at the end of June 2019, and then we'd pick it up from there and make sure there was continuing focus and getting the change the Productivity Commission roughly was talking about to actually happen. So, but then the levy came on, and so the government had the very good idea, or bright idea, I suppose is a better way to put it, of saying, well, ACCC, can you monitor that the levy hasn't resulted in higher prices for consumers? So that slightly muddied the water, but we were there, so they asked us to do that. So that just further elaborates the background. So what we're doing now, I think, can be put under two headings. One is in terms of our inquiry work. We've got an inquiry into home loans. Initially, that was to what extent is the cash rate getting passed through? To what extent are consumers paying too much for loans? And so, you know, we observed a range of things. Firstly, the cash rate, often banks would or would not pass that on depending on how their profits were being affected. I think one thing I learned from that is the banks really can't complain about the political focus on what happens to mortgage rates when you have a cash rate change, because they only ever change the standard variable rate when cash rates change. That is, it's not as if they might just find their cost of funds have gone up or down and so they change the standard variable rate. No, they wait for the cash rate to change. So of course, the link between the two politically has come about. So I don't think the banks can complain, oh, look, don't you realise there's other factors at work? Well, you haven't played them into the equation. I don't mean that to be too critical. I'm just saying it's sort of no surprise. I understand why the banks do what they do. Then with the loyalty tax, which is my shorthand term for charging new customers less than old customers, I mean, we have observed things about that. And what I find fascinating with that issue is that when we mention this publicly, a lot of lawyers say, but hang on, it's not illegal. And I say, we never said it was illegal. I don't even think it's irrational to do that. I'm just here pointing out to consumers that, by the way, you can save yourself a lot of money if you either switch banks or pressure your own bank to put you on the new rate. That's all we've been saying. So I accept loyalty tax as a pejorative term. It's our attempt to get consumers' attention, because consumers tend to take on mortgages and then forget about them. So so that was what that was about. But now the work is moved to what are the impediments to switching, either from the bank side or the consumer side. And look, that just raises the fascinating issue of, to what extent, and this happens everywhere, to what extent should government be concerned if consumers aren't switching to better deals, versus to what extent should you just say, well, it's their problem, they got the choice. And so what we're trying to do is think our way through that, because obviously often the banks won't want people that aware of this option. So should we do more to make them aware? But obviously you can't do too much. I mean, at the end of the day, if you think you've got the settings right for consumers to have enough information and then they don't actually switch, well, that's fine. That's fine. It's giving consumers the options and making sure they have enough awareness we're solving for, rather than them actually changing, because that's ultimately got to be up to them. So that's one bit of work. The other bit, which has been going on for a long time, but it has a COVID twist, is just getting closer to APRA, the Reserve Bank, and ASIC. I mean, we've always been close to ASIC because we've got this boundary line between what's a financial services consumer issue and what's not. So we deal with them a lot. But APRA, we didn't deal with much at all. Reserve Bank, we didn't dealt with a little bit on a few things, but this has meant we now have regular engagement, particularly with APRA. And so they're helping us understand their world, which is very helpful, and we're helping them understand competition. that's been a good association. I think that's worked really well. We've all got to know each other better. I think in the COVID environment, what we've said is let's work together to see that the sectors, well, let me put it as crudely as I can. What I don't want is a call at 5 minutes to midnight saying a big bank's got to take over a little bank, otherwise a little bank might fall over and the customers will be disadvantaged, so you better allow it. Now, I'm not saying there's any suggestion any of that is likely at the moment. And frankly, I don't see any sense that it is. But when you have difficult economic circumstances, you've got to be prepared. So we're just making sure we keep the lines open with the financial regulators to make sure that if there are any issues, we can bring a competition lens to that so that you don't have bad competition outcomes that could have otherwise been avoided. We're doing this with other sectors as well, but having the financial unit really helps that integration. So that's probably the dominant focus. In addition, of course, to enforcement cases, which people know about. I don't need to go into.
In terms of the Homeland Inquiry, you were saying that some of the focus now for the final report is on the ease with which consumers can switch. Interested in how you might be accounting for the effect of the consumer data right in that. I mean, it hasn't been around for a particularly long time, but I mean, is that something that you're factoring into the final report?
Absolutely. It's not the only thing we're doing otherwise, because that's already happening, so you don't have to do anything. But no, the consumer data right is hugely important for this, simply because, as we all know, because we've all had this experience, if you want a home loan, you've got to go through a great palaver. If you've got one and you want to change, there's a big palaver in doing that. You've also got bundled accounts, and so that difficulty is switching, the sort of transaction cost or just the mucking around factor. It's more than people often have time for, even if there's a lot of money at stake. So CDR, consumer data right, will help enormously with that. So it's a big part of it. It's not the only story, but it plays into that crucially, as you suggest, Rebecca.
Excellent. And I guess enforcement, I know that you say it's not something that everyone's across, but it is still something I think that people are interested, particularly in what your focus for enforcement might be. And one question that was sent in prior to the session was around syndicated lending and the important role that syndicated lending has in providing liquidity to Australian companies. But it necessarily requires lenders to cooperate, and really just what the ACCC's view on syndicated lending is in current market.
Oh, look, I think there's pretty clear rules around that. We understand how the world works. I mean, you've obviously got carve-outs for joint ventures. There's a whole lot of issues there that we understand, and I think there's been some confusion with the current case in relation to that. On the other hand, if people are aware that in the financial sector that there's such a thing as competition law, that can only be good. I mean, what we all want is efficient markets. So yes, syndicates come together to bid against each other, and therefore having the syndicates come together is fine, but they shouldn't, between various syndicates, be exchanging information, which sometimes can happen. So I would say the financial sector, probably less than other sectors, has paid attention to competition issues. So I think it's good that is becoming central to their thinking. And the finance sector, more than other sectors, is very much built around relationships and networks, and that's fine. But know what you can and can't do. So of course you can come together as a syndicate, but as I say, you can't be exchanging information when you're running up against a bid to get the work with other syndicates. So, and look, that applies. You use that example right across the financial sector.
And I think, Rod, certainly having you come and speak to the BFSLA is an excellent way to sort of help promote competition laws of being at the forefront of people's minds when they're doing financing activity. Rod, I might move on to some law reform areas and consumer protection. Actually, before I do, somebody has popped up with a question, which was that in the past, the ACCC has made comments that financial services firms might not be as aware of their competition law obligations, as you were just saying. But have you noticed any change over the past 2 years that the FSU has been operating? And do you think that financial services firms are now finally beginning to get it?
I think they are. I can't, I mean, I'm not close enough, and I don't think it's possible for anybody in the ACCC to be close enough to give you a really precise answer. But the feedback we get in a lot of ways is that absolutely they become a lot more aware. And if I could just make a bit of a step out comment, while all this working from home, because I've been doing that since early March, we've gone back to work in all states except Victoria and New South Wales. And since I'm in New South Wales, we're still working from home, constantly thinking about what we do, but that's what we're doing. And while there's many benefits to that, the disadvantage is the networking. And, you know, I've done a lot of Zoom events and Skype events and Microsoft Teams events, and they're terrific. I mean, I did one in WA last week and I didn't have to go to WA. I mean, how good is that? And you could see everybody on screen when they asked, you know, it was really good. But of course, you miss the side conversations. You miss the people coming up to you and just having a chat and mentioning a few things. So, yeah, it's got many pluses. Obviously, it's got a huge number of minuses for a whole lot of people, particularly if you don't have a job. So, you know, it's an that I miss. So anyway, but my strong sense from a large number of directions is it has changed considerably, and that's good.
Excellent. All right. Consumer protection and law reform. Look, I think it's fair to say that following the High Court's decision in ASIC and Cobalt, the law of statutory unconscionability in Australia is best described perhaps as a bit of a jumble. We saw last week the Victorian Court of Appeal essentially trying to fashion a definition of statutory unconscionability from mainly the dissenting judgments in Cobalt, plus Justice Gageler's majority judgment, to make some kind of workable definition of unconscionable conduct. And similarly, I think with the ACCC's appeal in Quantum, looking as to whether statutory unconscionability requires some special disadvantage the way that it does in general law. I think sort of standing back, what these things sort of combine to suggest, to me at least, is that the bar for unconscionable conduct, whether it is a general law or statutory unconscionable conduct, is very high. And it means that there's perhaps a gap in terms of regulating sharp practices that fall short of unconscionable conduct. I know that in the past you have talked about the desire for having a prohibition on unfair practices. And I was really just hoping that you could elaborate a bit on that to perhaps describe what type of conduct that you think that would be looking to regulate.
So these are really important points, and obviously all the examples I'll give won't be in the financial sector, because all the issues we've talked about in the financial sector are ASIC issues. I just think these are huge issues for the workability of a market economy. We always have to remember that the way the market economy works, and I know everybody knows this as a statement of the obvious, but the way it works is individuals and companies pursuing the profit motive works to help to be the most efficient way of running the economy and the best way for consumers. But that only works if you've got a lot of competition. That was the Adam Smith insight. The invisible hand is competition. Without competition, it falls apart. But also you need other protections as well. And it's important those protections are in place. Otherwise, people start to question what is otherwise a tricky system. I mean, it's a bit like democracy. It's a lousy system. No one's come up with a better one. Market economy, it's a strange system to run, but there's no better one. But you've got to make sure you're nurturing it and making sure that things, not too much happens, which gets community distrust. So unfair contract terms, that was a great thing to introduce. And I've said many times, but I'll say it again here. When I speak to small business and they say, oh, I'm getting dreadful treatment from a bigger player, we need Section 46 to come in because they're abusing their market power. What is most often at the root of that is an unfair contract term. And so it's not 46 at all, of course, as we all know, but it's not stupid whinging either. It's getting forced to sign a contract that allows the big supplier to change terms, contract out of liability, and that's just not sustainable. So unfair contract terms, it's a good law, but it's fatally flawed because it's the opposite of the ACCC enforcement model. Our model is take action when we find a breach, tell everybody about it, and get deterrence. There's no deterrence in UCT because it's not against the law. I mean, half the time when we confront companies with UCTs, they change them. The other half the time, they tell us to go take a jump in the lake. Those aren't the words in the letter, but that's the meaning.
Yep.
And only when we get to the court steps do they say, all right, we'll change it. And we have spent enormous time getting no deterrence. We get one contract change, but we send no wider deterrence message. So it's anathema to our whole model. We're not staffed up to take individual complaints and deal with individual companies one by one. We're staffed up only to take court action and get deterrence messages out there. So we need UCTs to be made illegal. The way they work now is just, as I say, the opposite of our business model. Unfair practices, I mean, the problem with unconscionability is people just can't get out of their mind the common law, contract law. I'm married to a lawyer. She's explained very patiently how unconscionability came about in the old days when you had a contract and someone said, well, hang on, this person was in no position to enter into that contract, so we'll let them out under this particular heading. Now, I may be doing a great injustice to my wife's explanation, and that's been around for hundreds of years. But now we've got a new law, a statutory law. It just happens to have the same name. But read it and read what it says. It doesn't talk about disadvantage. And yet, because of the title, the two get conflated. So again, I have the advantage of not being a lawyer, so I can simplify and rough up things enormously, Rebecca, which probably irritates everybody. But, we've got a problem here. And, some people, and I, obviously the greatest respect for Bob Bax, he always thought this was a law that should not be in competition and consumer law. I used to say back to Bob, well, where else would you have it? Who else should do it? And should we not have a law that says you just cannot behave abominably? So I think you should, for the reasons I mentioned before, underpinning of a market economy, but unconscionability is just getting too tangled up with the common law version. I think unfair practices is a better description. And of course, it runs into that complaint that many people make, well, hang on, we don't want, competition's got nothing to do with unfairness. No, that's right. That's why it's in consumer law. and consumer law is different to competition law. And so, one example, simple example, is a company, a digital platform, knows there's scams on its website, but does nothing to take them down. That costs people a lot of money. You may have seen Andrew Forrest in today's paper again complaining about that. A lot of people have fallen for the scam using him, and he's very upset about it because he gets the letters from pensioners saying, I put $10,000 into this only because you recommended it, Andrew, and I've lost all my money. Andrew Forrest believes Facebook's done nothing to take it down. I don't know if that's true or not. And I'm not trying to get into that issue, but clearly there are things that are done which are unfair, where there's got to be some way of dealing with them. And so we come up with this stuff quite a lot. And, I probably should have been better prepared with examples, but this is, to me, it's behavior that is out of the ordinary. It's not what you're there to do. It's not, not your normal course of business. And I don't think it's, in Facebook's normal course of business to have scams. And it does enormous detriment. So in a sense, two hurdles, but the enormous detriment's very important. It's not just, gosh, that was unfair. No. It costs them a lot of money. It did a lot of harm. Now, I realise there's a lot of debate needs to be had around that. I realise that framing that law needs to be careful. But I believe, firstly, as you said, Rebecca, unconscionability's just fallen off the rails. And secondly, that we do need a law like this to protect the market economy from dreadful behaviour. And look, even big companies can do things that aren't good, whether the board of directors knew about it or not, or whether it's something low down in the organisation, but it can happen. It shouldn't, and we need a law to deal with it, and we don't have it now.
I guess it's perhaps in some respects similar to the commercial trickery that the trial judge was talking about in quantum decision. It's sort of sustained and deliberate. But it is, as you say, something that probably requires quite a bit of debate about what the boundaries of it look like, because quite potentially there's the risk of unintended consequences, which if they can often be very difficult to spot until things get into practice.
I guess just to put it this way, though, with any law, you've got to watch. You've got a trade-off there that it is a burden for business. It could have unintended consequences, but it can protect consumers. So which way do we bias? And I do find that large businesses have a pretty strict interpretation here. They've opposed just about every change to the law that's ever existed. Not all, absolutely not all, but a lot of them. And I just think a slightly broader approach would be helpful, because they want faith in a market economy just as much as I do. And I think a little broader approach would be helpful.
So I guess that leads to a question, I think, Rod, about timing. So if I could ask, do you have a time frame, firstly, for unfair contract term changes to make that conduct prohibited rather than just unenforceable? And do you have a broader time frame horizon for unfair practices?
My timetable for unfair contract terms is yesterday.
Right.
It's been around far too long. It's going through, I think, excessively cumbersome processes. When you think of how quickly other laws get formulated and made, this one's been around forever. I think most people think now it's inevitable. I don't think I'm getting much pushback against it, yet we're still ages away from getting the law passed. So yesterday is my answer for that one. Unfair practices, unfair contract terms obviously clearly defined. We're just making it illegal, and we've got now a lot of case law, so I think that's straightforward. Unfair practice is more complicated. It's going through a ministerial process of consideration, which I think is appropriate. So we're at this stage comfortable with the current process that's going on through the Consumer ministers, Commonwealth, state and territory. But we'll want to see that it keeps moving, I guess, rather than get stalled. So provided it keeps moving, the current process is fine.
Okay, terrific. Thank you. I wanted to move on then to data. It's something that obviously banks collect a lot of data, and it's often described as being the new oil, right? And I think that that was initially in the context of it being described as valuable, but if it's not refined, it can't be used. But from a competition perspective, that is a really interesting analogy as well, because of course it was the oil companies that gave us the trust that led to antitrust. And I think that we're sort of seeing to some degree data companies, digital platforms, people having the same reaction to them that they did to the oil companies, and even particularly overseas, I guess, calls for them to be broken up. Now, I know that you've done the digital platform inquiry and recently released draft code of conduct. And as much as I would really like to chat about a lot of those things, because I think that it's really fascinating, I don't want to draw you back a bit to data. And I've heard you say in the past that Australia's privacy laws are not fit for purpose for a data-driven economy. And we've seen two instances now of the ACCC bringing action using its misleading and deceptive conduct powers for what could probably be characterised as privacy protection. So I was just really interested in your perspective as to what is an effective means of regulating privacy in a data-driven economy. Is it focused, is it a consent model like GDPR, or is it more of a prohibitive model? I know there's a lot to unpack in that. But...
No, there is, but I'll try and be as efficient as I can. Look, we got into privacy issues through our digital platform inquiry because we felt the terms of reference required us to do so. We worked very closely with the Privacy Commissioner, and I've said many times I didn't know the Privacy Commission even existed prior to doing the digital platform inquiry, and I later found that we worked in the same building in Sydney. So that allowed us to talk quite a lot. But since the digital platform inquiry, and we've made recommendations on privacy, we've now stepped away from privacy. The two cases I do not think are privacy cases. They are misleading consumers cases, the essence of consumer law. It doesn't matter whether you're misled about the quality of a product, the price of a product, or really you were misled about the data, which some would say is the price of the product. So again, you could say you've been misled on price. So I don't see it as any different to any other case. And I don't think the Privacy Commissioner does either. Privacy does things over here. These were misleading conduct cases. So it had nothing to do with any view I've got on privacy laws or they're adequate, whether or not they're adequate. Just very different issues. I mean, you want to turn off location. You thought you had. In our view, still before the courts, we allege that you hadn't and you weren't informed about that. So you were making a choice. And so I think it's not privacy. It's straight down the line misleading conduct. We're out of the privacy area. But having asked about it, I'll go back into CDR now. CDR has very strong privacy protections. And I have observed before, particularly of the Privacy Commissioner, that we are putting in place privacy protections in CDR, which are needed because we don't feel we can rely on the privacy laws that generally exist. And look, part of that is that here's a government sanctioned data transfer model. So you better make sure it's trustworthy. So yes, that probably raises the stakes on privacy. But I think the fact that we're having to do that so much is indicative of a privacy regime that is probably a bit outdated in a data-driven world. So just to give you one other example, a bank has data, and I'd be very confident in saying the banks are now doing things with data that they couldn't do if they'd got that data as a data recipient under CDR. right? And that's very interesting, and I think worth reflecting on. Now, how do you fix it? Bloody good question, Rebecca. Out of my area of expertise, but I can see you've got a consent model. I can see you've got a prohibition model. I honestly don't know which is the best, but I do know a lot of thought needs to go in it. We're not going to be leading the charge, apart from saying what I'm saying now, which is to say partly come from digital platform inquiry, partly come from what we're doing in CDR to protect privacy, with the Privacy Commissioner at the table, I might add.
Yeah.
So I think, should we follow GDPR? I don't know. I honestly don't know. But is it, do you have a prohibition or consent model? I think that's a crucial question. What's the most effective? What does not raise barriers to entry for other players? That barriers to entry question surrounds the GDPR. People say it favours the platforms against other companies. I think others have got to deal with those questions, not the ACCC chair. But I think there's a problem there to be addressed, and it's a fascinating intellectual and practical question of whether it's prohibition or consent.
We've had another question, which I think that you've sort of, dare I say, largely just touched on there, which is around the demarcation between the ACCC and the OAIC's respective roles. I guess particularly around consumer protection.
I just don't, I don't see the problem. I know I get asked this endlessly, but we're talking to the OAIC constantly. Sarah Court, who heads our, the commissioner in charge of the enforcement committee, our lead commissioner on enforcement, she talks to Angeline for quite a lot. I do occasionally, but Sarah does on a systematic basis. We know what they're doing. They know what we're doing. I just don't see the issue. OAIC has taken action, I think, against Facebook for a privacy issue. That's not a consumer law issue. It's a privacy issue. We've taken action against consumers being misled. It's not a privacy issue. It's a misleading consumer. So I understand the need for us to work closely together to avoid duplication or not knowing who's doing what, but we are doing that. Just like we do with ASIC, where, this carve out, as everyone on this call would know, for financial services. Okay, what's a financial service?
Yeah.
I knock on the door and I sell you hire purchase. Is that ACCC or ASIC? So we give each other mandates very, very often. So we're taking things under the ASIC Act, they're taking things under the ACCC Act, for the avoidance of doubt, or it might interest one regulator over the other. So we do a lot of that. I think there's more overlap between ASIC and ACCC than there is between the Privacy Commissioner and the ACCC, but we're constantly talking, and that's the only way to solve these things. So I don't think they think we're treading on their toes. And to say constant communication.
We touched a little bit on CDR, and I guess, it hasn't been in operation for a particularly long time for the major banks, and implementation has been deferred for smaller banks. But I guess really interested in your view as to how much of a game changer that you think CDR will be.
Oh, I think it'll be a massive game changer. I'm convinced of that. And Australia having a cross-economy model is doing what no other country in the world is doing. And I pay tribute to Peter Harris and the Productivity Commission. It was their idea to do this. They pushed it really hard. They asked us to get involved. When I understood the logic of it, we absolutely did. And we ended up becoming the regulator. Whether that'll be the long-term position or not, I don't know, but we are now. And I just think, we want data to be used for the common good. What a fantastic thing to have all this data. it's terrific. It helps better decision making. It's going to help better health decisions. It's going to help in all sorts of ways. I accept, much as people would be surprised to hear me say it, that, you know, more targeted ads may be better than less targeted ads. So, but it can help better decision making the whole way. But it's got, you know, you've got to make sure, not make sure, you can't make sure, but you've got to minimise the harm, because you can equally see the harm that can come with people having that much data. And I think Cambridge Analytica was a great example of that. I think some of the way data is allegedly used in the Brexit decision is another good example of that. There's talk about data being used to influence elections, and we can all see how that can be done, especially, you know, the US doesn't have compulsory voting. So who do you want to encourage to get out and not get out to vote? So you can influence people's behaviour for good or for ill. So look, I think CDR is going to be a game changer. We've got to get it right. So at the moment, there's 4 big banks as data holders and 2 entities as data receivers, but we've got about 70 entities coming through the pipe as data receivers. I think the big 4 banks will be data receivers as well, and then there'll be more data holders coming through. So steady as she goes. Let's not muck this up by trying to move faster than we can, because if we make a mistake, you then get a bad reputation. You know, I mean, if there's many programs, I won't mention any because it'll be pejorative, but there's programs out there that get off on the wrong foot, and they get a bad reputation. Well, I will mention one. I'll mention the NBN. You know, a lot of people talk badly about the, you know, pejoratively about the NBN, but, you know, thank goodness it got completed in time just as we locked down for COVID. I mean, pretty useful. So the NBN's brought great benefits, but in those early days, there were problems and it got a bad name, and it's hard to shake that. So we're trying very hard to make sure CDR doesn't get a bad name that'll be hard to shake.
Excellent, thank you. I've got another question here, which is, if it's steady as she goes, is it too early to be talking about write capabilities within CDR?
Oh, that's a policy decision. That's what I think Scott Farrell's looking at, if I've got that right. No, I don't think so. I think it'll be an orderly process. And keep in mind, you've got screen scraping going on. So I'm also conscious that a lot of what CDR might replace, whatever the risks in CDR, it might be better than the alternative. So no, I don't know exactly when right access will get brought in. As I understand it, that's still a decision outstanding, but I think it's appropriate to start looking at it, because I think CDR and NBN are very similar, right? I mean, NBN started with a good idea to have I don't know if it's a good idea or not actually, but nonetheless, the decision was made. So I'm just getting the cat off my lap, trying to stop the cat jumping up and blocking your screen. But NBN was announced as a new company. And so Mike Quigley, the CEO, walked through the door and it had one employee, Mike. So he had to get employees around him and he had to roll it out. And of course, government was pressing a very ambitious timetable. Well, of course, the timetable slipped. Of course, there are a lot of problems in a lot of ways. Of course, there were. And now, of course, it's actually got the rollout completed on schedule. And so there, you know, you can just sort of see it slow start and then whoosh, takes off. Well, that's what we're aiming for with CDR. And I think now that we've got the IT instrument in place, the RAP, I keep forgetting what the acronym stands for, but that's in place, that's working, the accreditation platform. That's what one of the A's stands for. Data is flowing in and out. It'll slowly ramp up, but I think because we're all in sufficiently good shape that hopefully right access will come when it's ready, but it can't be that far away. I think we've got the system in place to do it. I mean, it's a big step, absolutely right access. But again, it will bring great benefits. You've got to be really careful about the costs. But as I say, you've got screen scraping now. I mean, we know at the ACCC of people who get an email or an SMS probably, or some other form of social media saying just click yes, and a $5,000 loan will immediately go into your account, because we know your account, we know that. And these are, you know, high interest rate, dreadful lenders, and vulnerable people are pressing yes, and all of a sudden they've got a loan that just blows out because the interest rate takes over. So a lot of stuff happening anyway, so we've got to keep that in mind. Sorry, that was too long-winded.
No, that's fine. But we are just about out of time. So, Rod, thank you so much for your insights and a very discursive discussion today. So thank you, and thank you to the cat as well. It's been really fascinating to...
Sitting patiently here, I think, for the thing to end.
It's been a terrific discussion on a range of topics, and I think that a lot of things that our members will really be able to get their teeth into. So once again, thank you so much. Everybody is on mute, so they can't give you a round of applause, but you can imagine a symphony of it behind you.
Okay, well, look, thank you for the opportunity. I really appreciate, I mean, I miss the boardroom lunches where you can get out and have a good discussion, and also apologies for some of the answers that were, whatever you might want to say now, they were too long, and so we didn't get as many questions in, but thanks for the opportunity.
Thank you very much.
Okay, thank you.
Bye.